We are on our way in earnings season. Ford came out this morning. We had Amazon and Microsoft come out on Thursday evening. Here to talk to me about it today is Thom Fross of Fross & Fross Wealth Management. Thom, thanks so much for being here.
Of course, good to be here, Joe.
So Thom, as you said, we had Ford come out this morning. We've seen a number of decent reports, Amazon and Microsoft, for example, but Ford having a little bit more trouble. What are you seeing there first?
Yeah, they missed by 6 cents a share, certainly not positive. It's going to put some pressure on the futures this morning. That being said, they did not change their guidance looking forward. So a notable miss, but we don't think it's going to have any long-term impact on Ford's share price.
So speaking of long-term impacts, you followed the earnings season so far. We're nearly halfway through, or at least we're hoping so, feeling like it. Your general takeaway for investors is what right now?
General takeaway is positive. We have 40% of the companies of the S&P that have given their numbers, and 75% have beat estimates. Those are great numbers. Last 2 years, we've averaged around 72% beating estimates. Also, revenue numbers still look strong. So, I think this goes back to the bigger picture. I'm still getting a lot of questions from our clients on, is now the time, we've seen the stock market hit a peak, is now the time to bail? And we firmly feel that equities still should have a very large role in a person's portfolio.
So let's turn to the economic indicators. Existing home sales and new U.S. home sales came out this week, and they weren't really all that much to get excited about.
To put it mildly.
And so, what do you think? Should we worry about a pullback in housing?
I think it's a realistic concern. 14.5% drop in the month of March. And the thing about new home sales is that those numbers are calculated at the date of the signature. And we were hoping that this would be because of the weather up north, but what was interesting is that all regions except the Northeast had a pullback.
Yeah,
but
that's interesting.
We don't want to forget, though, that when new home sales, or when people sign that contract, it's because of all the looking that they were doing over the few months before that. So maybe January and February did have a larger impact on that March number than what we think.
And so let's get a quick preview. We've got jobs report coming out next Friday. Jobless claims are at 329,000 on Thursday. What are you expecting to see in that big jobs report?
Well, we're hoping to see it improve. The jobs part of this economy has been the anemic part. But also, as we think about the big picture and we put these jobs numbers in context, Joe, we were losing 665,000 jobs a week back in 2009. And right now we're concerned because we're losing 339 rather than the estimate, or 329 rather than the estimate of 310. So we still think that the economy is well into the recovery stage of the Great Recession. We do not see things going backwards.
All right, Thom, thanks so much.
Absolutely.
That's Thom Fross of Fross & Fross Wealth Management. For TheStreet in New York, I'm Joe Deaux.